Let's go. Follow the yellow brick road. Follow the yellow brick road. I'm off to see the lender, the wonderful lender of Wham. I am the Wizard of Wham. What's going on, guys? My name is Min Winning with What's a Mortgage. Tonight, we are going down the yellow brick road. We're going to follow the yellow brick road until we get through to becoming a homeowner. Tonight, we are going to break down the home buying process brick by brick, step by step, so you can understand and know how to get through it. I understand buying a home can be stressful. Buying a home can build a lot of anxiety. Buying a home can ruin marriages. Yes, I've seen people get destroyed over arguing about home ownership. So tonight, we are going to break down step by step so you can understand what it takes to become a homeowner. Okay, if it's your first time tuning our channel, welcome to our page. Also, if it's the first time tuning in, do me a huge favor, hit that like button if you enjoyed this video. Also, if you're not following us by now, if you're first time, please hit that follow button, all right? My name is Min Win. I am your host. So tonight, we are going to go through our home buying process. I haven't done this in a long time, but since I've seen so many people fall out of escrow recently or get denied on escrow, people DM me, oh, why did this happen? Why did this happen? If they knew the process, they can probably minimize those issues so it doesn't happen. All right, guys? So, Instagram family, can't wait to see you on YouTube Live. Don't forget YouTube Live / What's a Mortgage. Enjoy the day. Let's see here. Woo. Way to go. It's a new. All right, Facebook, YouTube, what you guys doing? How you guys doing tonight? Doing good? So let's go over this home buying process. I can't hear you, not sure why. I always check your posts. Someone can't hear it. Can you hear us now, Arnett? What's going on, Sakaro? I haven't seen you on it forever. What's going on, Miguel? Can you hear me now? Let me know if you can hear me. Give me the thumbs up if you can hear me. Hear me? Hear me? Hear me? Can you hear me? It is? I'm not seeing any issues on my side. All right, cool. Now let's go through the home buying process. Yes, if you want to be a homeowner sometime sooner, you might be in the process. You're like, what is next? Tonight, we're going to go over what's next. We're going to go over the home buying process, okay? Step by step. Some of you guys are newbies. Some of you guys aren't. But be patient if you are not a newbie for the people who they just started the process, okay? If you're in one of the process, let us know. If you're in process 1 all the way to process 9, okay? So here is the first step to home ownership. If you're going to buy a home or sell your home, step 1 is finding a lender, okay? You want to find a lender that is transparent about their mortgage license, rates, and fees. Your lender should give you different options and offer underwritten approvals and not just pre-approvals. So we live in some crazy times right now, guys. You know, a couple times people have reached through the DMs and told me the person they were working with, the realtor that referred them, the lender, or the realtor who tried to be a lender, was not licensed. So when someone reaches out to you or you reach out to them to get a mortgage, you want to look up to make sure their license is active. Because at the end of the day, if something goes wrong, you need someone licensed to take responsibility. So make sure they are licensed. Okay, number 1. Not some guys, they just have an NMLS number, like a mortgage license number, but it expired. I had someone, oh, this person, I thought they were licensed. Their license was expired. So you want to look up their license, make sure they're legit. And also, you want to make sure they're legit with their fees. By the way, unless you want to buy down an interest rate or you're doing down payment assistance, 99% of lenders know all their fees up front. Okay, there's a couple different types of fees. There's lender fees, miscellaneous fees, title, escrow, and your prepaids. Lenders can control the fees that they control. They know what they are. So if they oh, I don't know the fees yet until you're in escrow, unless you are buying down a specific interest rate or doing down payment assistance, the lender knows the fees. And they don't want to share that with you. That is a red flag, okay? Important. Also, because of the new laws that changed February 2023, sometimes FHA is better than conventional. Sometimes FHA is better than conventional. Sometimes conventional is better than FHA. You definitely want to see different options. Sometimes it's better to put your own down payment and take a higher rate to cover closing costs than doing down payment assistance. So you want to make sure you talk to a lender, you share with them everything you're looking for, and make sure they're providing you different options. But let's say you have under a 620 credit score, you're going FHA for sure. Okay, makes sense? So definitely talk to a lender, make sure that they're licensed, make sure they're transparent with fees, and make sure they go over different options with you. Okay? And times are changing right now where lenders have a lot of time on their hands. So ask them, can you do an underwritten approval instead of a pre-approval? Okay? The reason why that's important, people are falling out of escrow left and right. You have one chance to write an offer to get your offer accepted. There's not that much inventory right now. There's 2.5 months. I think there's 612 active listings on the market that are not in escrow. Okay? You're fighting with way too many people. The last thing you want to do is you took you months to get your offer accepted. All of a sudden, there's a hiccup in your loan. There's an issue. So ask for can you put my loan through underwriting? If you are self-employed, you better go through underwriting. If you have irregular income, you want to go through underwriting. You can get away with it as a wage earner, like W-2, and you're on salary and hourly, that's it. But other than that, if you want security though, go through underwriting. Have them issue an approval, okay? If they issue an approval, you want to start clearing all the conditions up front. So when you actually find a home, they're just cutting a check, right? They're wiring money to escrow to buy you that home. So you want to do that up front. So make sure a lender provides that. In this time, it's crazy. Mortgage banks and mortgage brokers both provide that type of information. So definitely, hey, can I go through underwritten approval? To go through underwritten approval, they will have to run your credit. So when you're in step one, they're offer a couple different types of approvals. You can go with a soft credit pull. If you got good credit and you're not really ready to pull the trigger yet, but you want to know where you stand so you can budget correctly, do a soft mortgage credit pull, right? The lender can review everything, right? It's not concrete like an underwritten approval, but a pre-approval is solid. You might also want, if you're like, hey, I want to take it a little bit step further, you can do a DU approval where they run your credit, and once they run your credit, they can scrape your credit against an automated system and offer you an approval. But if you're like, I'm ready to rock and roll, I found the home of my dreams, you can do an underwritten approval up front where you run credit, the lender scrapes your credit, it goes to underwriting, and underwriter reviews your income, your credit, and your assets and issue an approval. Okay? So I would do that step one. Unless you're paying cash for a home, you want certainty in the biggest investment you're going to make in your life. And to do that, get that underwritten approval. That's why step one is the most important thing. So if you're going to buy a home 6 months from now, a year from now, Brian, I'm going to answer that question a little bit, okay? If you have questions, I'm going to answer it after the live. So thank you and be patient, okay? So after you go through underwritten approval, step two, finding the right real estate agent. You want a realtor that knows how to negotiate during a seller's market and knows the cost of improvement. If you are buying a new build, you want your own representation, okay? So if you're buying new construction, you got to do step two first. If you're not buying new construction, then do step one, okay? This is where it flip-flops. New construction, start with phase two, okay? Not new construction, start with phase one. When you pick that realtor, you want to find a realtor that knows how to negotiate in a seller's market. In a seller's market, you can still negotiate. I've seen some of my clients, since they went with the realtor they picked, they didn't want to listen to me. I see them overpay. They're afraid to ask for concessions, or they had to pay penalties, or they couldn't get contingency waived. I see people lose their deposits because their realtor didn't know how to negotiate. They went with their cousin, a friend, or family, or they went, and I'm not saying that they're wrong, but they didn't do their research. They didn't see, hey, that person had to sell you, okay? If you're buying something that big, you want them to sell themselves to you because you want to know that they can fight for you. You want to make sure you have an agent that can fight for you, not lay dead. You do not need an Uber driver. You can go on Zillow, Redfin, and find your own property. You want someone that understands and how to negotiate. The second thing, realtors hate it when I say this because a lot of realtors don't know. You want someone who knows home improvement. I had a client, they went with their aunt, and their aunt made them back out of a deal because there was termite issues. The aunt didn't even read the termite report. To fix the termite, it was $2,000. Say again? Okay. Is it still frozen?
Connection. Give me a second.
Okay. You just lost it?
Yes, it is still frozen. Connect. Okay.
Is it connecting?
Connecting. The camera is. Okay, you're fine. You're fine.
All right, cool. So, where can I start?
You're good.
All right, cool. All right, so once you find that agent that knows how to negotiate, okay, they know how to negotiate. They work on your behalf. They gotta know construction. People hate it when I say that. A lot of agents hate it because they don't know it. Like I said, my aunt, or not my aunt, so my viewer or my client, they had something wrong with their property. It was termite. It was $2,000. They backed out. Okay, the next home person closed on escrow and got a $15,000 price reduction. So we saw the deal close and we're online like, dude, they got over $2,000. They lost 15 grand because the client's aunt did not know anything about construction. If you are not buying new construction, you want someone that knows construction, because if something goes wrong and they know how to negotiate, they're not losing. Because it is seller's market. Sellers don't want to fix a lot of stuff. But if you know the seller is waiting for you to buy the home to get to their next home, you think they won't negotiate with you? Of course they will, right? They want to get to their next home too. But if you don't know that, or their urgency, how do you know how to sell? That's why in times like this, if you're not buying new construction, you do not deal with a Johnny come lately. A Johnny come lately is someone who comes late to the game. They were too late. It's not your fault they're new to real estate. So make sure they know how to negotiate, and make sure they know how much SHIT stuff costs to fix, right? Make sure they understand that. And if you're buying new construction, you want someone that represents you. A lot of times when you buy new construction, if something is wrong with the property, trust me, that agent who is your buyer's agent works for the builder. Imagine this. Think about it. Common sense. They work for the builder. Wouldn't you help the person that's paying your paycheck over the other person that is not paying your paycheck? Correct? So if you're buying new construction, come in with your own agent. Things happen. You might want to back out. You don't want to risk your deposit. So before you go to an open house and write your name in the book, when you write your name in the book, you forfeit your right to a real estate agent if you click no, that you don't have an agent. So now they are in control. In case you want to back out, you'll lose your deposit. If you close late, you're going to pay per diem. You want someone who has your back. You want to make sure you do that, okay? So once you already got the loan stuff situated, you unleash your conditions, you find the right realtor. And remember, if it's new construction, you flip-flop it. Number 3, finding the right home and opening escrow. That is step 3, okay? Finding the right home and getting into escrow. I'll answer that in just a second, Liz. So find a home, open escrow. Determine your purchase price, negotiate your terms, and clear your earnest money deposit check. So this is where, okay, you have an option to lock as well. When you get this purchase contract, this is where your agent, not your agent, I'm your agent, right? I should be the only agent in your life. I'm kidding. This is where your agent fights for you, okay? On your purchase contract, you negotiate the price. You negotiate who pays what. I've seen agents who are buyer agents, they fold, they bend. The seller's agent was able to convince the buyer's agent to pay the seller's closing costs. I was blown away. I'm like, what are you paying for? They're like, man, why are your fees so high? Those aren't my fees. You're paying the seller's closing costs. That's insane. So that's why you need a good agent, not someone who just bends. So, but you're going to see it on the purchase contract. So you're going to find a home. You're going to get into escrow. There's 3 contingencies. There's an appraisal contingency, a home inspection contingency, an appraisal contingency, and a loan contingency. Make sure your agent negotiates and you don't waive all contingency, even though seller market. Try to hold on to one, okay? Make sure if you buy the house, you don't let the seller stay so long. So we had a deal where they're in escrow. They're buying the house owner occupied, but they let the seller do a rent back for 6 months. So when you buy a home owner occupied, you sign an agreement saying that you're going to move in 60 days. Now they couldn't go owner occupied anymore. See what I'm saying? That they cancel the escrow, redo it all over again. They were still closing, but it dragged on the process. So you make sure someone knows what they're doing and negotiates correctly. And at that time, when you know in step 3 is where you're probably gonna sign a lot of you sign the purchase contract, you write up your offer, the seller counters, you counter back and forth. Okay, nothing is a done deal. I celebrated once when the seller verbally accepted my offer, but they went with someone else. Okay, until you cut the deposit check and that check clears, you got nothing. Okay, so once everything is kosher, you understand purchase price, you understand any credits, you understand who's paying for what fees, you understand your contingencies, you understand how long they got to get the F out. Okay, once you understand all that, you cut your EMD check, and once that check clears, step 4, you initiate the loan approval. Unless you did that underwritten approval up front in step 1, you're going to deal with it in step 4. Okay, this is when disclosures go out, things go back and forth. There's something called the intent to proceed. You got to sign that right away. If you want to review all your documents before you sign it, that's fine. Do me a favor. Step 4. Sign the intent to proceed so the lender can go ahead and move forward and order all your internal information and order your appraisal. I had this lady, like, I'm not signing anything until my cousin, who's a lawyer in another state, reads this. So she dragged on escrow for another week. And guess what? The seller everyone was unhappy. Okay? She didn't close on time. She paid penalties. So it's okay to review everything. Just sign the intent to proceed. Don't forget, unless you bring your money in or release all your contingency, you can't lose your money. So don't be tripping or be afraid. Sign the intent to proceed and then review everything you need to, upload everything. Escrow's going to have you sign a big packet too, but initiate takeoff. So this is when the procedure starts. If you did that underwritten approval up front in step 1, you're just waiting for appraisal to go out and come back and wait for title to clear. Make sure there's no liens on it. Okay. If you do step 1 right, step 4 is a cakewalk. And this is where so many people fail. This is why a lot of LOs, now not all, but a good amount, they're closing their loans in less than 21 days. In this market, mortgage banks are sitting on their hands, right? They're strangers, if you understand what I'm saying, guys. Right, I'm kidding. But anywho, so they're just sitting there not doing anything. So you can close in 21 days if you do the underwritten approval up front. If you do the underwritten approval up front, step 4 is a cake walk. So once you do step 4, step 5, you clear the rest of conditions, okay? Even though step 1 was perfect, step 4 and then step 5, clearing conditions. You want to clear title, you want to clear escrow, you want to clear appraisal. You want to clear any credit, income, or asset conditions that you didn't clear up front. If there's something wrong with the appraisal, this is where you negotiate. So step 5, okay? Don't forget, from step 3, 4, and 5, you can lock the loan whenever you want. It's up to you, okay? It's up to you. You can lock whenever you want. Okay, so you can either lock right away or you can time rates if that's what you're looking to do. But step 5, this is when I see step 5 is happening a lot. Appraisals coming short. Now it's up to you and your agent to either renegotiate the price or there's some credits coming, okay? Or someone's backing off the price. Step 5 is crucial right now in a seller's market. Homes aren't appraising or a home inspection comes in, something is wrong. Step 5 is where you did your job. This is where your real estate agent earns their paycheck and they do their job. So you know if appraisal's in, if you already cleared all your conditions, step 1, you're just waiting. So be patient. You are not in control. So there's nothing you can do. So you shouldn't freak out, spaz out. But once step 5 is done, step 6, okay? Once everything's a go, step 6 is going to be the closing disclosure, the CD, okay? The mortgage bank will issue closing disclosure before loan docs go out. Make sure everything matches on the loan estimate, and if it doesn't, there's a 3-day cooling off period before loan docs go out. Your loan docs go out and make sure your loan is locked or you will have an issue. Okay, or they won't issue the CD. So make sure that thing goes out. Yes, there are companies that can lock afterwards, but most companies want you to lock up front. When that CD goes out, you want to make sure all your borrower fees match. They don't control title and escrow, but the fees they control, it better match. Okay? If there's any big changes, there's going to be a reset on when docs can go out, or it's going to be extended. So when you're in step 6, you're almost at the end of the race. Just make sure everything is what's supposed to be. Okay? The one fee that pops up a lot I've noticed recently is transfer of taxes. So with the transfer of taxes and actually the owner title policy. So when a lender provides something called the loan estimate, the transfer of taxes is not on it. The reason why is because the seller is supposed to pay the transfer of taxes unless your agent negotiates that you are covering it. It's a seller's fee because it's their taxes, not yours. But if you don't negotiate correctly, you got to pay. And I've seen it pop up a lot because you see these agents, the Johnny come latelys, they're like, hey, even a person selling it, like, hey, you're willing to pay for it? Seller agent's like, you want to pay for it. Okay. But a lot of times the seller agent knows it's not the seller, it's the seller's job to pay for those fees. So you want to make sure you have a good real estate agent. Another thing, owner's policy. So if you want it, get it. But typically when you buy a home, you yourself, you're already paying for the lender's policy, right? For title. So if you want to buy another policy, you've already paid for one that does that same job as the other policy. So make sure you're careful. Yes, you can get a buyer owner's policy that does other things too, but if you see those fees pop up and they weren't in the loan estimate, it's because, you know, either your realtor didn't forgot or didn't tell you, or they negotiated something else, and you didn't say no to the escrow company. I don't want owner's policy. I already got the lender's policy. Okay? So make sure you know about those fees. Then step 7, right? Step 6, loan docs go out. You get the CD, you sign. Step 7 is you sign your loan docs, okay? You sign your loan and escrow docs. Remember to use a notary approved by the title company, okay? I had a viewer, they were so cheap. They wanted to use some notary that doesn't even do mortgage notaries that charge $50 because they thought they're stamping one piece of paper, right? When you do notary, when you sign loan docs, you can do electronically now. Some states are still doing physical. You do physical, it's like a Bible or Encyclopedia Britannica, right? Like the new edition, like this thick. Okay, so make sure your notary is a mortgage notary that knows how to review loan docs, and make sure they're approved by title. If they're not, you're gonna have issues. Typically, most people go with escrow, but sometimes I like to sign at home. People like to sign at home. You can get a mobile notary. Make sure, because you want to review it, right? You want to have time to review it, right? Even though you have a copy, but if you want that time and patience, you want to make sure that mobile notary comes over. They're approved with title, okay? That's step 7. Step 8, you're going to do your final walkthrough, and then you bring in the money, okay? Be careful of wire fraud. Make sure to wire from an account that has been verified by your lender or escrow. Okay? So, the wire fraud, it doesn't happen that much, but it does happen. You want to make sure that you know exactly who to wire the money. If you don't know, call the escrow company. Hey, repeat the wire. Make sure you know that wire. You can do a cashier's check, but something that big, I probably wouldn't go cut a cashier's check. But you want to understand, right, where to send the wire. There's been stories, people wire, it was on the news. A couple bought a home in Corona, and they thought they were buying a home, and they wired all their money. And guess what? It was wire fraud. They copied the email, and instead of .com is .con. Like, they just made some changes where the M looks like the N, and it was all over the news. I think a couple years ago. It does happen, so be very careful. Okay, typically when they bring you the notary brings you loan docs, or you go sign an escrow, you will see the copy of the wire, where to wire the money. Make sure you wire to the right place. Happens a lot. Not that often, but enough for me to let you know, okay? So step 8, you walk through. You are cool with everything, okay? I'd rather be cool with everything than lose the rest of my money. I'd rather lose my deposit. I'm not saying that you want to, but walk through. Everything is kosher. You wire your money. Step 9, your loan is funded. You fund your loan, and then it records, and you get your keys. In step 9, that loan must record. I've seen people have their loans unfunded before, where the wire went back. So you want to make sure that thing records. Once it records, your money, you're safe. You're good to go. All right? So that right there, my friends, is the home buying process from step 1 all the way to step 9. So you know what to expect. So if you do step 1 right, step 4 and step 5 will be a cakewalk. Majority of people get stuck in step 4 and 5. And because they didn't do step 1 correctly. Okay? If you do step 2 correctly, then when you go through the walkthrough and all the other step 2 and 3 and step 8, you should be solid. All right? Step 5, that's why you got to find a good agent. These are the 9 steps. People get stuck on some of the steps, but now you know what to expect in each step and you don't get stuck. Okay? That's the main thing. Do not get stuck. Hopefully this information helps you out. If it did, do me a huge favor. Please like this video. If you're not following me right now, please hit that follow button. All right, guys? Appreciate it. Thank you guys so much. Let's get some couple Q&A here.
Thank you, Agoy, for 50 stars.
Oh, thank you, Agoy, for stars. See here. Let me see here. Thank you so much. Appreciate it. Miguel, what's going on? Socorro OG, Triple OG, what's going on? Arnett Savage, I cannot hear you. Hopefully you can hear me now. Lorena, what's going on? Liz, what's going on? Squidward, love the name. Here's a question from Arnetta Savage. What if I'm on workman's compensation, but I do have a pension from Blue Cross 2020? Why can I buy a home based on the workers' comp? Okay. It comes in weekly and monthly. I receive $2,000. Help me. By the way, I will be 62 years old. Workers' comp. The reason why you can't buy it, if you can show proof that you're going to receive it for 3 more years, then you can pretty much use it. If you cannot prove that you're going to get it for 3 more years guaranteed, then most likely you can't use it. Okay. Most likely you can't use it, but I've seen people overturn workers' comp, but they can show proof they're going to get it for 3 more years. If you don't have a history of 2 years and you can't show proof you're going to get it for 3 years, you can't use it. But I would love to see your scenario. Give us a call, 714-790-9697. Send us a DM. My team and I will jump on it. If you have a loan estimate, you want me to help review it or find you a better deal, send it over to info@whatsamortgage.com. All right. Justin Blake, how do I take away PMI on an FHA loan? Unless you put 10% down or more when you buy, on the 11th year, it will fall off on FHA. But if you haven't, Justin, it is permanent unless you refinance off of it, okay? Out of it. Hopefully that helps you out. Melissa, what's the big difference between FHA and conventional? The big difference is FHA, unless you put 10% down when you purchase, the PMI is permanent. There's upfront and monthly PMI. On conventional, the PMI is temporary. Once you have enough equity, it falls off. FHA, though, has a lot of good benefits. For those of you who went FHA, if you can't make a mortgage payment, you have up to 12 months mortgage forbearance. That doesn't happen on conventional. Conventional, you might get 6 months. Not all lenders do it because it's not guaranteed. FHFA has guaranteed you 6 months, but before that, it wasn't guaranteed. Hopefully that helps you out. Karen, if the loan lender doesn't give you a loan estimate, you might want to talk to another lender. All right, Karen. Sorry for the cough, guys. Yvette Elizabeth, how does the down payment assistance program work? Do you get approved first and then they cut the check, or do they wire to escrow? So Yvette, there's a couple different types of down payment assistance. First, there is the loan. If you get a loan, you have to pay it back. Typically, the rates are kind of high on loans. If you get a grant, the money's forgiven, but the rate's even higher. And then there's shared equity, where they loan you the money, but you have to split your equity with them. And typically, they approve you for the loan. You have to do a class. Most down payment assistance programs, you have to do a class. And then when you go to escrow, when you go, into escrow about to fund, that's when the wires go over from escrow. From the company. Okay. Hopefully that helps you out. Brian, what contingency do you recommend or request for your client? I depend on how I feel out the agent. If the agent is really concerned with the appraisal, I'll release it. I'll hold on to the loan contingency. Okay. I'll hold on at least the loan or the appraisal, one or the other. Hopefully that helps you out. Ronaldo, what's going on? Justin, what's going on? Thank you, Brian. Thank you, Miguel. What if the realtor is also repping the seller? I don't like it, Liz, when the realtor is repping the seller because I know in the state of California, the real estate agent's obligation is to the seller first, right? To whoever they came upon first. So hopefully that helps you out. I'm not a big fan of it. I would take your own representation. Okay, Brian Tamayo. I hope this video is saved so we can review it again and again, and we make sure we get it right. Oh, of course, Brian. It's on our. Is it still on our YouTube channel? This will be on YouTube, Brian. You'll be on YouTube and Facebook, Brian. What up, Nichols? Let's go get in game, y'all. This is how the rich get rich, one property at a time. That's right, one property at a time. Lock it and cop it and don't back out of escrow. Don't be scared. Scared money don't make money. Once you are in, hold and ride up the wave, then your time will come to leverage your equity. Yes. One of my biggest regrets, Nichols, is that I did not do it myself. Okay. We have our home and we have my parents' home. But I did that and I did a lot of other investing. Yes, it was cool. But if I had a chance to do it all over again, I probably would have bought a lot of real estate outside of California. I live in California, and buy cheaper property and collect the rents on them. But even in my home, I wish I bought mine for $780. I think it's worth close to $1 million now. I know like 2 years ago I had a chance to buy it for $625 and I didn't. 2 years before that, right? And I didn't. I froze. I don't know. I don't know why I didn't. And I end up paying more down the road. Anyone who talks smacked about last year, oh, you're overpaying. Payments went up higher now. If you are financing a home, mortgage payments move with inflation. So inflation means things keep going up, but it can go at a gradual pace or a fast pace. Look at history when there was deflation. There are little pockets, but overall things push up. So the longer you wait to buy a home, the more expensive it's going to get. How people make money on real estate, they buy it early. When they buy it early, everyone's definition of early is different. If you get it early, I'm gonna write that one down. Everyone's different definition of early is different. Early for you is now. And then 5 years, 7 years, 10 years down the road, you're not really stressing about it, okay? So good job, Nichols. All you need, that's right, Nichols. Dude, Nichols encouraging. Jimmy Wong, what if the current rate now files not verified income? If the current rate now files not verified income, if you can't verify your income, you have to go with a non-qualified mortgage. Okay, hopefully that helps you out. If I refinance, can I buy down the interest rate at that time? Yes, you can, Nichols. Edward, what's a good resource to look up regarding construction? The termite example for new agents to at all learn a bit about those situations, maybe a few topics to Google. If you're a new agent, Edward, if you want to learn more about new construction, I think you got to. Where do you learn, right, about termite? Well, that termite report, your agent should know all that. And if your agent doesn't know all that, that's why first question I ask my agent: do you own a home? Number two, I ask them: have you flipped property? I like real estate agents that flip or have investment properties because they know the cost of things. That's my main. I asked my agent, cool. You have some? Show me what you flipped. How many investments you have? Okay, cool. Do you know a lot about construction? If they don't know a lot, there are agents that don't know that are killing it, but I prefer that they know a lot. Okay. Zori, how can you float down in 30-day rate lock? Most lenders won't let you float down within 30 days, Zori. They're not saying that there isn't. It's not possible, but it's hard to find. Okay. Miguel, any website you recommend searching for new construction homes? New construction, I don't. I normally look in the city that I type in new construction in the city that you're looking in, or pick an agent in that city and that specialize in that city, and I'm sure they have a lot of research on it. Okay. Hope that helps you out. Liz Rizzo, you're welcome. The New Jersey down payment system does not allow points to the loan, and the interest rate is set by the program. Normally, it's below par. Wow, Joe does mortgage. That's insane. Good job, Joe. Love that. That's why I love how it says Joe does mortgage. So if they don't charge points, it's built into the rate. And then one way or the other, everyone's got to make their money. Okay. But that's a solid program, Joe. Zori, you're welcome. I want to buy a second property. Would it be difficult to go for a single family home to a multi-unit? If you want to do that, Nichols, you want to make sure it's over 100 miles away from your current home and you have a good reason to be moving to that Ford unit. Okay, that's not impossible, but there is a way. You can't do it close. I want to buy a second property. Would it be difficult to buy a single family? That's how I would do it, Nichols. Okay, buy further out and really move into it. Don't forget, if you say you're going to move in, you have to move in within 60 days and live in it for at least 1 year. Should I buy out my primary and do a 5% conventional? What or should I buy out my primary and do a 5% conventional? Um, if I had a family, I'd probably go 5% down, upgrade to another home. If I was single, I have a family, so I'd go 5% down, go to another home, 5 or 10% down. If I was single, I would find a place to move. That's I can buy a 4 unit and go FHA 3.5% down, move further out. That's what I would do, and then make sure my job is remote. Okay, hopefully that helps you out. Veronica, what are your thoughts on purchasing a home later in life? Both my husband and I are in 40s and never purchased a home. I think if you're doing big down payment, it doesn't matter. If you're not doing a big down payment, um, a home is good for like a mortgage is good for 30 years. Let's say for 15 years, right? 15 years, you'll be 55. So Veronica, if you're 55 and you buy a home, no, so you're 40 when you buy a home, okay? 55, you're still working. You're gonna work till 62, correct? So if you buy in your 40s and by the time you retire, you have over 40, 50% equity. If you never make another mortgage payment, you can do something called a reverse mortgage. It's not for everybody. But if you don't have anyone who's going to take care of you and you don't want to trip over rent 15, 20 years from now when you're retired and you can't afford to pay more, you can do a reverse mortgage and that will cover your mortgage payment. You can even set it up to cover your property tax and your hazard insurance as well. So I think it's cool. I think being your 60s and a little harder. 40s, 50 max. You know, I think over 50, I'm not saying you shouldn't. I think there's, at that point now, I was trying to think of ways to build money to put it. It would be hard at 50. It would be hard unless you're going to work till 70. If you're 50 working till 70, yes. 60, and unless you're buying a home with a family member that you're going to pass on the house to that's going to let you live there, okay? It's going to take care of you. Irv TV, if I purchase if I want to purchase early next year, by when do I need to buy required before I required to file my tax returns? So if you're W-2, you have to worry about it. Your employer files it for you. If you want to buy 2024, file in January 2024. Okay? Hopefully that helps you out. All right, guys. I appreciate everyone who liked, viewed, and commented. Do me a huge favor. If you're not following by now, please hit that follow button. And for those who did, who are already following and you enjoy the content, please like this video. Tag someone in it that you know that will enjoy this content and find this content useful, right? Thank you guys so much. We want to end all our videos with our attitude is gratitude. Without you, there is no us. So thank you guys so much and have a